Good morning, children. So, here we are continuing with part 5 of the chapter journal. In this, we are going to discuss various banking transactions. That means where the payment is made or payment is received using bank account and not cash. So, let us begin. We are starting with recording of banking transactions. As you can see, I have made it in a tabular form. It is just like the one which is given in your book. Left hand side is the transaction and right hand side is showing you the entry. So we'll be discussing the logic behind the entry. The very first transaction is when the cash is deposited into the bank. That means when the business deposits some amount of money of cash into the bank. Now what will be the effect? When the cash is deposited into bank, that means cash is going out of the business, and being a real account, we know that credit what goes out. So therefore we will credit to cash account. And what is the other effect of this? That the balance in our bank account will increase, and our bank balance is also an asset. And as we know, asset carries a debit balance. So if the value or if the balance of asset increases, it will be debited, and if the balance of asset reduces, it will be credited. So whenever the cash is deposited into the bank, it increases the bank balance, and therefore bank account will be debited. So what will be the entry framed when cash is deposited into the bank? Bank account debited because bank balance is increasing, to cash account because cash is going out. Second transaction is just the reverse of this, that is when the cash is withdrawn from the bank. That means when the business is withdrawing some amount of money in cash from the bank. Now what will be the effect? When the cash is withdrawn from the bank, it is coming in the business, and again cash being a real account, we will debit because the rule says debit what comes in. And what will happen? Now the cash is coming from the bank to the business, so ultimately the bank balance will reduce, and bank balance is an asset. Asset carries a debit balance, and when the balance of asset reduces, it carries a credit balance. So here we will credit bank. So the entry for cash withdrawn from the bank will be cash account debited to bank account. The third transaction, when checks, drafts, etc., received from the customers are deposited into the bank on the same day. Now, very important, children, you have to see that whenever the question says that received a check from a customer or received a bank draft from a customer, etc., the very first thing which you should see before passing the entry for this is that when does the business deposits these checks or bank drafts, etc. That means whenever the question says that the customer has paid or the bank has or the business has received some check or some draft from the customer as a payment, the very first thing which you should see and check just before passing the entry is that the uh, whether the checks or drafts so received is deposited on the same day or not. If it is deposited on the same day, which is the third transaction, if it is deposited on the same day, then what will be the effect? Again the same effect, bank balance will increase, so we have debited bank. And just remember the rule, whenever the bank balance increases, bank account will be debited, and whenever the bank balance reduces, the bank account will be credited. So here when the checks, drafts, etc. are deposited on the same day, bank account will be debited because bank balance will increase, and this is received by the customer. So customer is a personal account, and what does the rule says? Debit the receiver and credit the giver. So the customer is the giver because he is giving the check, therefore we will credit to customer. If he is if it is a human being, we will not write the word account. Fourth transaction, when checks, drafts, etc. received from the customers are not sent to the bank on the same day. Just the reverse. That means now when you check that whether it is reserved or basically deposited on the same day or not, you found out that the checks were not deposited on the same day, then in that case there will be two entries. One entry will be when the checks is received, and second entry will be when the checks and all are deposited. So the entry when the checks are received and not deposited on the same day will be checks in hand account debited, because we have not deposited the checks as of now. So how can our bank balance increase? So therefore we will open a new account, that is checks in hand account, which will be showing how much checks or how many checks have to be deposited into the bank. So we will debit checks in hand account to who has given the check? Customer. Customer is a personal account. Personal account, the rule says debit the receiver and credit the giver. So since customer is the giver, he is giving the check, we will credit to customer's personal account. That means if it's a name of a human being, if it is a human being, then we will not write the word account. Fifth transaction, again, when the checks have not been deposited on the same day, we will pass the entry checks in hand account debited to customer account. And when the checks have been deposited, then on that date we will pass the entry bank account debited, because now the checks is being deposited and it will increase the bank balance. So bank balance or bank account will be debited to checks in hand, because when we received the check and we did not deposit it on the same day, then in that case we have opened a new account, that is checks in hand account. And now when these checks are being deposited into the bank, now we need to close this checks in hand account, therefore we will credit to checks in hand account. So don't forget children, whenever the question says that received a check or bank draft etc., the very first thing which should pop up into your mind, you need to check whether the checks are deposited on the same day or not, and then you will do that accounting treatment accordingly. Moving ahead children, the sixth transaction, when a customer directly deposits the amount in our bank account. That means when the customer is not giving us money, or when the customer is not giving us any check or anything, what the customer is doing, customer is directly depositing the money in our bank account. He is having the account number, he is having the details, and he is directly depositing the money in our bank account. Simple. What will happen because of this deposition or this deposit? The bank balance will increase, and therefore we will again debit bank account. And now where is this money coming from? This money is being received from the customer is a, and where is this money coming from? This money is being deposited by a customer being a personal account, the rule says debit the receiver and credit the giver. Now since the customer is depositing money in our bank account, that means customer is the giver, and therefore we will credit to customer. So the entry for when a customer directly deposits the amount in a bank account will be bank account debited to customer's personal account. And if the customer is a human being, we will not write the word account. Then seventh transaction, when a check previously deposited into the bank is dishonored. So whenever the check which was deposited into the bank is dishonored, that means it has been bounced, maybe because of insufficient balance or the signs does not match or etc. Any other reason can be. The entry will be reversed. That means bank account will be credited, because now since the check has been bounced, check has been dishonored, the bank balance will not increase. So what increment we have shown in bank balance needs to be decreased, and therefore we will credit to bank account. And because the check given by the customer has been dishonored, now again the customer becomes our debtor, because again he will have to give a fresh check or freshly payment so as to rectify this loss. Then eighth point, when a check is received from a customer and discount is allowed to him, and if the check is deposited into the bank on the same day, that means we are receiving the check from the customer, we are giving the discount to him, we are allowing him the discount, and the check is deposited into the bank on the very same day. So what will be the effect of this? First of all, the check amount will be deposited, will be cleared by the bank, and it will be deposited in our bank account, due to which our bank balance will increase. Being an asset, if it increases, it will be debited. So we will debit bank account with the amount of checks so cleared. Then The discount which is given by the business to the customer is an expense for the business, that is a discount allowed. Therefore, it will also be debited to customer's personal account, that means to name of the customer. Then the B case can be in case the above check is dishonored, that means if the check gets bounced, the discount allowed to the customer will also be withdrawn. Obviously, if the check we have deposited into the bank, we have assumed that it will be cleared and it will be added to a bank balance which will increase it, and that's why we have given the discount also. But if sometimes later the check is dishonored by the bank rejects the payment of the check, then in that case, why will the business give any discount? In that case, everything needs to be withdrawn, and therefore the reverse of A entry will be passed. Customer's personal account will again be debited now because the check has been dishonored. Now again the customer has become the debtor for the business, because now again he owes money towards the business because the check which he gave has been dishonored. To bank account, why? Because we thought when the check was deposited, we assumed that it will be cleared and will be added in our bank account, and therefore we increased the bank balance. Bank account was debited. But when the check is being dishonored, that means it is not being cleared, it is being rejected by the bank. Then why will we show the increase in bank balance? Therefore, the increase which we have shown now needs to be counter checked, now needs to be nullified. Therefore, we will credit bank account. And similarly, we need to withdraw discount also. So the discount allowed account which was debited now will be credited so as to withdraw the amount of discount allowed. Then the ninth transaction can be when payment is made by issue of check. That means when the business is paying somebody through the medium of check by issuing check. So what will happen? Obviously, the person to whom the business is paying, it's a personal account, and the personal account rule says debit the receiver and credit the giver. So when we are giving the check to the person, to the customer, to the supplier, anybody, he becomes, being a personal account, he becomes the receiver of the check, and therefore we will debit the personal account. If it is a human being, we will not suffix the word account. And how are we making payment? If we were making payment in cash, we would have credited to cash account. But here we are making payment by issuing a check. That means the money will be deducted from our bank balance. That means our asset will decrease. Therefore, we will credit to bank account. 10th point, when expenses are paid by the issue of check. That means rather than paying the expenses in cash, we are paying the expenses in check. Very simple. When we are paying the expenses being a nominal account, we will follow the rule debit all expenses and losses. So when we are paying the expenses account will be debited. For example, rent account debited, commission account debited, interest account debited, etc. And how are we making the payment? We are not making the payment in cash, rather we are making the payment through check. Therefore, the our bank balance, our asset will decrease basically, and therefore we will credit to bank account. So if the question says rent paid rupees 1000 by check, the entry will be rent account debited 1000 to bank account 1000. Moving ahead, 11th point, when cash is withdrawn from the bank for personal use of the proprietor. Now, the moment you come across the word personal use, the very first thing which should pop up into your mind is drawings, and drawings account will be debited. So when the proprietor is withdrawing cash from the bank account for personal use, then in that case drawings account will be debited, and what is decreasing? Cash is not decreasing, bank balance is decreasing. Therefore we will pass the entry drawings account debited to bank account. Then 12th A point, when interest is charged by the bank. That means, very important, the word by is very important. When the interest is charged by the bank, that means bank is taking interest from us, maybe for the services which the bank is giving to us as a customer. So the bank will be charging some kind of interest, some kind of service charge from the customer. What the bank will do? Bank will reduce or decrease or cut the amount from the bank balance, and because it is an interest charged by the bank from the business, that means it is an expense for the business, and expenses being a nominal account will be debited. So the entry will be interest account debited to, because the amount will be deducted by the bank from the bank balance, so we will credit to bank account. Entry will be framed as interest account debited to bank account. 12b part, when interest is allowed by the bank, that means very important word, allowed by the bank. In earlier case, interest was charged by the bank, that means bank was taking interest from the customer, from the business. But here the bank is allowing the interest, that means bank is giving interest to the business on its deposits, and it will be added to the bank balance. It is like an income, like a gain for the business, and we know that being a nominal account, any income, any gain will be credited. So therefore we will credit to interest received account, and this interest amount will be added in the bank balance of the business. As a result, it will increase the bank balance, that means it will increase the asset, therefore bank account will be debited. So the entry for interest allowed by the bank will be bank account debited to interest received account. Then the last transaction, when bank charges some amount for the services rendered by the bank. Now when the bank is charging some charges for as a service charge basically. So any service charged by the bank from a customer is known as bank charges. It is not interest, don't get confused. Interest here means any kind of interest charged by the bank on some kind of loan taken by the business or etc. And so banking charges means, bank charges means those expenses or those charges, those amount which are charged by the bank for the services rendered to the business by the bank. Again, these are the amount charged by the bank. The bank will decrease such amount, will cut such amount from the bank balance of the business or the customer, and therefore it is like an expense for the business, and any expenses will carry a debit balance, therefore we will debit bank charges account. And since these charges will be deducted from the bank balance, as a result of which the bank balance will decrease, and therefore we will credit to bank account. So the entry for any bank charges deducted by the bank for the services rendered will be bank charges account debited to bank account. So I hope the entry, the transactions which are discussed here related to banking transactions are clear to you children. These are very 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 simple. You just need to see that where you were writing cash, now you will be doing the transaction through check, that means through bank. But one thing you have to be very particular about, that whenever a check is received, whenever a payment is received by check, the very first thing which you should see is whether the check is deposited on the same day or not. If the check is deposited on the same day, then bank account will be debited. If the check is not deposited on the same day, then we open a new account known as checks in hand account. And when this check is deposited in some other day, then the checks in hand account will be credited so as to close that, and bank account will be debited, because ultimately we'll assume that the check is being cleared. And another thing which you need to remember, that at the time of dishonor of a check, when the check is rejected by the bank, the entry which you would have passed for depositing the check, the same entry will be reversed. Even if some discount has been given, then too the discount will be withdrawn as well. So I hope the entries are clear to you children. These are very simple entries, and it will be easier for you to remember it when you go through the logic. So go through the video once again children. I hope all the topics are clear to you. Go through all the parts, revise all the logics, revise all the entries, and since it is a practical subject, practice as many questions as you can. It will be beneficial for you only, and especially do the questions which are being given to you as a homework. With this we are winding up with the adjustments, with the entries of the journal chapter. In the upcoming video, that will be the last part video of the chapter journal. In that video, what I will be doing is, I'll be discussing one full-fledged question which will be encompassing different transactions that will be compiled from different questions of your book itself. So till then, thank you children, take care. So this is, since this is your verbal homework, Now the written homework, this is the assignment which you need to do in your copies. You have to answer the following question in your accounts register. You have to solve practical question number 16 to 20 from the chapter Books of Original Entry Journal of your accounts book by D.K. Goel. That means you have to solve practical question number 16 to 20. That means 16, 17, 18, 19 and 25 questions. And again the same thing, children. Now I will not say that you have to do only those questions on which we have discussed the transactions, because we have discussed each and every transactions as of now. So you will be practicing each and every transaction, and also those transactions which you have left out as per the previous videos, because we did not discuss the entire transaction till then. So just go through. You need to complete practical question number 16 to 20, all the questions, all the transactions, because we have completed the chapter till there. And also the previous questions which you have done, which you must have done, which were given to you as a homework, just go through those questions once again. Just the transactions which you have missed out just because those were not discussed, kindly just go through that and try and do that also, because we have discussed all the transactions. In the upcoming video we'll just discuss one full-fledged question so as to encompass all the important transactions. Once again it will be a kind of a revision. Thank you children, take care.